Good afternoon. Welcome to Option Standard, Sunday, March 9th, 2025. Hope everybody's having a wonderful weekend. Welcome, traders. We're going to go through SPY top-down analysis. This is a super important video. If you believe or if you want to see another point of view of what this bear market should look like, could look like, we're going to go through that on the upper time frame, spend a little time up here, and also do the top-down analysis and show, very importantly, that we could make a new low. We left some unfinished business, perhaps, before we get our rip your face off rally. So I'm looking for a rally. That's why I changed the verbiage in my thumbnails, and we're looking for a dead cat bounce. All right. This may end up being a few minutes longer than typical. So go ahead and play that video at 1.25, 1.5, even 2 times speed if you want to get all this information faster. I always recommend that because there's plenty of videos that you guys want to watch, I'm sure. Okay, I know I do. So let's jump into it. If you're interested in getting the individual analysis videos, we went through a lot of details, and we're going to continue to have tech analysis and individual names. So that's $4.99 a month. Consider becoming that. But just 99 cents for our regular membership with YouTube, not Patreon. With YouTube comes with the Discord and trade alerts. Follow my options portfolio, and a bunch of camaraderie in the Discord and stuff like that. So let's jump into it. We have SPY on the monthly time frame. We don't have time to go through the other indices. This is going to be very important in itself. We have a naked chart here with just the moving averages. Now, in itself, we know that this was a structure, flat pattern, complete. All right, so we're in another structure here. Is that structure complete? Are we just correcting this structure in general, or is it just this one? Those are the things that we want to answer in this video, and just show you the scenarios if that is to happen. Now, I know that we talk about in our past videos on SPX going back to 1929. We don't have that information here. We go back to the 90s, but for this purpose of this video, this is we just need the correction of here. If things get out of hand and we need to talk about bigger recessions, extraordinary top, which I think is very possible, we can do that in future videos. For now, if we're just correcting this structure around the monthly time frame, is it possible we continue the trend at this 20 trend moving average? I don't think so. I think we're looking for, and there's many reasons, but we have negative divergences on I'll show you those in a minute. Are we coming back to the 20 just to check in, home base, and trending higher? Is it something a little bit more serious? Are we correcting this structure to come all the way down to about the 450 there, where the 50-month moving average is? I mean, that would be normal, right? But does it start to get a little bit more hairy down here to test the lows? I think that's a very, very good chance right there. I think we have high probability that we at least test the lows. But in my opinion, I think we're coming all the way back to the 200-month moving average where we started. Okay, and that would take us to the Corona crash lows. You have speaking, volume. Let's go ahead, while we have this naked chart on here, pull up the volume profile. If you noticed, first off, it kind of gives us a visual of all of these moving averages that I'm talking about, right? We have volume shelves. Large one right on top at this 50, right at the bottom of this shelf, right where all this volume happened at the 100. Look at that perfect shelf right here at the 200 simple moving average. Now things get a little bit more hairy. All this is right here, we have a volume node, which is this structure here. The largest volume shelf on this goes way back to 130. Now, I don't know if that happens. That's extreme, right? but we have to keep it in mind. So the move off of this, a 1 standard deviation, is to this volume shelf here. That's right at the bottom, right here in 2015-16. That's a huge volume shelf there. All right. So all these are possible, and you see they match up perfectly with different levels. So we could simply just draw a trend line, or not trend lines, but support resistance, just using these volume nodes. Okay. So we'll leave this volume node on. We'll talk about this in more depth here in just a minute. If we put on one of our charts has our Fibonacci's, I'm going to look at this on the weekly, so don't worry about this. And it's all clustered there. But if you look at these Fibonacci's, they match up with these volume nodes perfectly. Okay. And I don't have further ones. Like I said, we're focusing on this structure here for the most part. We'll talk about that. So there's a chance that this is a 1, 2, 3, 4, and 5 wave done. I know that there's different ways to count it. I was playing around with this being the 4 and such, and that would give us kind of inning diagonal there with a 1, 2, 3 for 1, or excuse me, ABC for 1, blah blah blah. All that. Let's take all this off. Let's talk about how are we getting. Where's that monthly? Here we go. Okay, here's our traditional look. So just from a traditional look, we made new highs, so we moved our trend line down here. And so this is really just a bearish rising wedge. This is going to play out sooner or later. This bottom of the wedge just happens to be right where this 100 moving average is. Look how clean that 100 monthly moving average all the way across here. So I presume this is going to continue, or at least to fade a little bit, but for the most part, stay with this trend line. So testing that would not be unordinary. Now, if we were to guess, I think this first initial move would make it down to one of these zones. And on the monthly time frame, I'm talking about a 5 wave move down and test possibly, well, the time I'm actually putting my cursor on it right now, this June of 26, right about there. I think that's our timing place here. A couple reasons to believe, but one that's just in general is that recessions last about 18 months on average. And I think that this move here would look something very similar to this. Doesn't have to look exact, but it should rhyme. And we get down to the trend line and the 100 moving average. That is just a guess, but I think that's what we're looking for, even if it's an ABC here for a larger move, which I think that's very possible. But it's going to be hard to, this is clearly an ABC because we have a flat pattern in hindsight, right? So we could get a 5 wave or ABC into the trend line, and that just happens to be the support area around 415, or maybe a little bit higher at 450. But I think depending on how long this takes, we get past these moving averages, and we come back to test this 100. And after that, we're going to have, in my opinion, just a guess, a bull market. But then that could be a lower low or just a higher low, depending on if we're looking for a flat pattern. This, for example, made a higher low. Or higher high, excuse me. Wow. So do we get a lower high or a higher high after a bull market? But either way, I think it fails. We break this trend line, and then we have a very difficult recession, a very hard move to the downside. And I think that's where it takes us to, in my opinion, this is one structure in itself, an ABC, where we could go test the lows here in the 200 moving average. That would be such a long-term situation where that's 2 bear markets, 2 recessions with a bull market in between. All right, there's many possibilities that could happen here depending on what structure is correcting. Now, putting on the indicators, This is why I believe we're getting our recession here. I think this is going to continue to give us divergence. I think the next bull market is going to give us a divergence here on the MACD. We haven't had that yet. We're looking for the crossover to get this first sell in the long term. This, we're looking to cycle down to oversold. I mean, after all these divergences, a three peak on the monthly time frame. We're getting our sell signal here on this slow stochastic. Okay, this should at minimum cycle down to the 0 line. This is all a recession. Now, after that, we should look for a bounce or a new high, collect negative divergence, and then that second wave should come through. Very similar to this. Is it going to be a flat pattern? I'm not sure. Is it going to be a zigzag? Is this a very tough move where it's a 5-3-5? That's very possible. Seeing how this is a flat, maybe there's alternation. It just all depends on what degree things are correcting at. We have a D mark, 9 count, the 13-9 count sell signal on the monthly time frame. Now we did, make new highs. That happens, but we got that exhaustion, right? Bollinger Bands, all of that. We have all this negative divergence and sell signals. Now let's go to the weekly. Let's go to the weekly, and we'll max it out here so we can see things. Here we are, weekly max. Okay, so here's our volume node on the weekly time frame. Clearly that goes right to that 15-16 volume node that we were talking about just a little bit earlier. I think this is a very likely place on that weekly time frame for us to get that volume node. So I placed it here, break down from this bearish rising wedge, and this goes much further back. But in the near term, we're looking at testing this 50-week moving average. Keep this in mind because I'm talking about the big picture, and we're going to give you that much sooner time frame to give you, if you're a near-term trader, that bounce that we're looking for. And while we're on the traditional look here, we have this bearish rising wedge here, rejected off of that larger degree wedge, broke down from it. So we have our sell signal on this weekly time frame. We're coming into the 50-week moving average, which clearly we're going to get a bounce off of it, but we don't quite have a reversal candle. So next week, my guess is that we bounce just a little bit more, and I'll show you this in more detail. We spike through the lows, and we get a doji week here, where possibly we're back up to at least the open or the close of last week, or maybe higher. And we'll test, in my opinion, these moving averages again, whether it's the 8 or even higher, to spike back to the 20-week moving average. Okay, and our next test after this will be our trend line. We're looking to get a 1, 2, 3, 4, and 5. So there's, we could break it down first and then back test in 5. All right, there's obviously multiple scenarios that we can go through. So changing boards here, and you don't need to see all the divergences and stuff like that. We have all of that in play. So timing wise, here's the time. We rejected off of that 200% extension, retracement, whatever you want to say, off of this correction here in 2021 going into 2022. And notice these different levels that come from this. And this will play in the next board that I put up. It'll be a very important board. Okay, so you have the former highs. You have the 127, which you see is clearly important. You have the 162, which is super important, and the 200%. Well, I don't think we're coming back there, but so if I dig in a little bit deeper, We didn't quite even get to that 162. I know that we tagged the very top of this wick here that gave us a bounce, but this is one piece of the puzzle that I think we didn't touch the 50 week. We didn't get to the 162. We have the 23% retracement here, and that can even be adjusted a little bit more because we moved price here. That should be about it at 613. So this is the zone I'm looking for. Notice this is about 560. Didn't get to 560. We got to 565, which is the top of my zone, and I'll show you that. And we actually missed it by 43 cents. But I'll show you where we could probably get down to about 555, but somewhere in between 560 will be that zone. So 560, keep that in mind. Get our bounce. And so I don't know if the low or the high is going to be into this cluster. All right, maybe we go into, this cluster starts from 411 and ends up at, I believe, the beginning of May. Yep, May 4th. May the 4th be with you. So perhaps we start our bounce. Do we get rejected and our low comes into this range, or does it even take a while for the bounce and we get our high, our retracement in April, middle of April, and we have our hard fall, which would be a wave 3, which is going to be our most devastating move of this wave, this 5-wave impulse move, and then we get the lows somewhere in May. Okay, those are the questions we're asking, and this is a great cluster here. Okay, so let's change boards and use these Fibonacci's just a little bit more. So this is our ending diagonal that we have here. We broke down, we have a 1, 2, 3, 4, 5 wave count that we're moving, that we're using. And with this, I think we're already at our max, right? Okay, so with these different levels, I got rid of the ones that are just individual. We're looking for clusters. So I took the lows here to the highs. And you see we have a cluster at the 50%. I took the lows to high of this full wave structure. And you notice how almost all of them match up with another. So a cluster 23.6 with the top here. And so as we dig in a little bit deeper, each of these structures, this one here. Now this is the former correction. So these are retracements to the upside here, extensions, if you will. So the former 100% is right with that 23.6. This 50% here, if I can get on there, is from the low of this structure that we just ended. All right, and you see the 382 and the 50% are perfect clusters there. And then I started to, now that we have more information, I started to plan out what this 5-wave move should look like. Notice the moving averages on the weekly time frame start to add up. There is a Fibonacci that matches up with this 200 week as well. But by the time that we get to the cluster, the reason why I took it out is because we're not getting there now. This 200 week will probably be at this cluster right here at that time at 484. All right. So if we can even get in just a little bit deeper here, these are all going to matter because this structure, what if this is just a 1, 2, and all of this is wave 3? So now we're at the 23.6, which would be a good spot to end the wave 4. And that just happens to be at that former 162 extension. And then we have this last structure that we just completed. All right, so is this a 1-2 setup? You have your 50%. 50% is one of those most important numbers when you're talking about each individual structure because you always get some sort of reaction off of it. It doesn't mean that it's going to be a low or a high, but you always get a reaction off of it, or most of the time. So this is going to be very important. All of these, you have a cluster here, which should end wave 1. We get our retracements, and we'll look at the retracements on the lower time frame. And then we should get our wave 3, and we can start to measure that. Well, as soon as we get up to the higher retracements, we'll add in more videos where I believe, because I did some work a little bit before, that our extension is going to go right into this cluster as well. So we have wave 3. This is massive, beautiful zone of all of these clusters, right? You'll get your bounce for wave 4. And then wave 5 should be coming into the 200-week moving average into this beautiful cluster here. So is this all working out? Is this just going to go directly to plan? Well, this one did, but we'll see. We'll see, and we'll adjust things as time goes, and we'll add more Fibonacci's if necessary to see what's happening. Okay, so the difficult part, now that we can go to the daily time frame, the difficult part for us, this first wave, is whenever you end off, first of all, waves, you see how messy that is? And that's the same thing. I know that in hindsight, this looks like it's straight down, and why didn't you just hold the whole time, right? Well, if you're trading, if you're a position trader, then, you know, like in my IRA, that we're just holding on to it anyway, okay? If you're a weeklies options trader like I am, then it was very difficult to hold on to a lot of them. We kept hedging and hedging on the way down. So it takes away from some of the profits, but it helps you protect here. Okay, so let's start off with the traditional look. And there's that bearish rising wedge. We got to the top of the structure we talked about in the last video. What structure? Sorry, not structure. I'm getting used to saying that word now, huh? So we have this cluster. We have this consolidation area. That's what gave us our zone a long time ago. We were looking for this to correct into it a long time ago, and we're finally getting to that point. This is not going to matter so much. I'm looking for a wedge. That wedge can expand. All right, keep that in mind. Our real structure that we're looking for is this megaphone. This megaphone still exists. It's still in play. We can extend this down here. And so we're coming into the zone here. In the middle of the zone is always a good place for price to stop. You have volume in here, and that would be the volume node. So in the middle of it is 560. That's where we're getting at. Okay, so what are we looking for? Possibly a rejection going into the 8 EMA and this downtrend line. They gave us a clue when this price action spiked up here, and it dropped. There was no way of knowing unless you were looking at that 50 moving average and this 8 EMA that the rejection would go much lower. You know, we could have back tested already a little bit higher, and that could have had a 5-wave move down there. So not the important part. Woulda, coulda, shoulda. Okay, we still have a downtrend. All right, and so there's two ways I'm going to look at this. We're not going to look at the Qs. I think the Qs are possibly going to make a higher low, but this one, I think the momentum is to the downside, and the trend line is out wider than the Qs. I think we're going to probably reject off of here, make a new low, and we would consider this is the low for our wave count. And then we're going to get a possible spike through here, and then a rip your face off rally before a fail. So that's what we're looking for. Now, we'll get to that in the 65. If we're looking at let's move to the daily time frame timing. Okay, so we're looking at the 1. We're going to spike through. These retracements are already here. You can dig in a little bit closer. Retracements are already here, and that's not going to change because I think the 1 is in. I think the wave structure is there, and we're looking for possible A here, and I think the A might get up to the 382. It doesn't have to, but you have, first of all, the big area where we rejected off of, held here, good support. It's been a very, very good spot for support and resistance. So we might reject off of this 382 or maybe just a little bit under it. And that should be where the trend line is. And then possibly get our low into 313 into that 560 zone. Okay, we're looking for this Thursday and Friday, and we have more time and price on the 65 minute into this 13 spot here. Okay, we have March 13th here, that Thursday, and it possibly could happen Friday, maybe overnight to get a low. And then the retracements are, again, we'll probably come back up here to, actually it should be at that point a fake break, a bear trap if we get new lows. We don't have to, this scenario doesn't have to, but I'm guessing because we have timing factors. And I shared that Friday with the individual investors and members. So we have real strong evidence that we're going to make a new low into a cycle low, daily cycle low, before a 5-wave rip your face off rally. And that rally could go as deep as 603. That would be the 786. That would take us all the way back up to that 20-week moving average. Okay, doesn't have to get that far up, but we'll be looking for timing and such into the 786. And I think there's all kinds of buyers. This is also a bullish setup as well, where you have an ABC, and they're looking for a new run here. So I think this could be really deep. This retracement here, possibly to the 786, because there's so many bullish buyers. Now, this also will be thought of as a wave 1 for the bulls. Okay, you make a new low, you got a 5-wave move up here, and then this is going to, in my opinion, fail. And that's where we start getting those lower targets that we're talking about. So let's see if we have, in the next video, I want to show the different, let's see if we have time. I got the time here. In the next video, I want to show the different positive divergences we're making, and we're going to make a daily positive divergence if we make that new low. But here in the daily time frame, you can see, again, this is where that zone is. This is where our Fibonacci's. We actually didn't even hit this 565.08 right there. We also have another line at 565.17, and that's what we were looking. So we really didn't even tag. It's just unfinished business. I guess that's the theme of this video. So let's go ahead and move over to the 65. On the 65 minute, we're looking for, again, this megaphone bottom. We didn't quite get into that box that I was talking about. So we have a channel. So potentially could go to the bottom of the channel, which would be a confluence of that lower end of this consolidation area and this box here. So it's possible to get to 555. Okay, just keep that all in mind. It could spike low and just zip back to the upside. Now, looking closer here, we have that channel, but we also have a wedge of the of this last move here. Okay, and this could reject off right away, but that doesn't fit our timing. So I think we break out from the wedge, head up to close the gap, which is resistance in itself, right into the downtrend line, which would be the channel top, and head lower. Okay, we have the megaphone down here, and we have our timing. I put our timing right here at the 14th, so it could happen 13th, but again, going into here, maybe we get down to this level on Thursday and we gap down on Friday and just rip. Okay, so many scenarios, but ultimately, overall, I think we hold in this zone and we have our move. Okay, FOMC. We talked about getting a low into FOMC. I think the low is going to be before that, and we have reason to believe because of weekly cycles and things like that that are ending on Friday. So FOMC, I think, is going to accelerate our move here. you know, could cause a little bit of volatility, but I think it'll accelerate our move. And maybe that brings us up to that 603 that I was talking about, the 786 right here. And that's an important zone. Again, all these support and resistances are created by volatility, by consolidation, and that happens on the lower time frame too. We actually have a good resistance here at 590 also. Okay, so I think this would be our last level to look at 503 at the bottom of this consolidation, which is the breakdown zone that we have here. Also, that's considered a back test of this wedge again. I know that we're not going to get to that wedge necessarily, but yeah. Okay, timing. Time, some fibs, all sorts of good stuff here. All right, so here's a closer look into just this move to the downside. We have a 1, 2, 3, 4, and 5 wave move. The structure looks complete. We had this ending diagonal to end this 5 wave move. We're getting the bounce here. We have the 23.6 that we're rejecting off of right now. I think we do get over that, and we start heading into some lower degree timing here. We have this beautiful cluster going into 10 and 11 into Monday and Tuesday. We should probably find a top. Remember that gap area is here. We have the 382. So I think we might reverse off of this time and price cluster. Now, forgive me for not giving you exact direction, but even if we make a low here, I think that will be our low to get our reversal. Okay, so, but my guess is that because our timing is a little bit later into the week, that's where we're going to find our low. Okay, so we're going to have our A expanded flat into 50% retracement, where we're possibly going to get your rip your face off rally after that, going into the 786 here. All right, so let's go ahead and end the video at about that point. Appreciate you watching. We'll give you some updates each and every day, so don't forget to like and subscribe this video, and have a wonderful rest of the weekend. We'll talk to you tomorrow.